Hello, and welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing in the Nigerian market for the past 2 decades. So in the course of this particular presentation, I want to talk about the fundamental analysis of Tantalizers and PLC. Tantalizer is a restaurant, and the company is in the service stroke hospitality sector of the Nigerian Stock Exchange. And the company has restaurants across different cities in the country. So in actual sense, if you look at what we have on the board here, the company generated a revenue of 2.162 billion naira in the full year 2024, as against 2.904 billion naira in the year 2025, the full year 2025, representing an increase of 34.30%, 34.30%, in revenue from 2.162 billion to 2.904 billion naira. We now go to the company's gross profit. So for the gross profit figure, the company made 425.16 million naira, 425.16 million naira, as against 463.78 million naira. So that represents an increase of 9.10%. This is a slight marginal increase of just 9.10%. So we equally want to take into consideration the company's operating profit. The operating profit here for the full year 2024 was a loss. The company sustained a loss of 189.93 million naira, as against a profit of 27.411 million, a loss of 189.93 million, as against a profit level of 27.411 million naira, representing an increase, an improvement that amounts to 114.5%. 114.5%. Now, for the profit before tax figure here, this particular tax before profit before tax, the company generated, unfortunately, a negative 259.59 million naira was the losses the company sustained in 2024, as against 85.800 million naira in profit in the full year 2025. And so this improvement, amounts to 133.5%. 133.5% is the improvement from a total loss position to a profitable position, as we could observe on the table here. Then for the profit after tax figure, the profit after normal taxation, the company sustained a loss of 265.59 million naira, as against a profit level of 68.638 million naira. All right, this particular improvement represents 125.8%, in improvements, in the on the profit after tax figure. All right, so we'll go down to the earnings per share. The earnings per share here, the figures may look small, as you could see, but this is the most important figure in the entire analysis we are carrying out now. So as at the full year 2024, the company made an earning per share of 5 kobo, as against an earning per share of 14 kobo here. So 5 kobo, as against 14 kobo. All right, so there's an improvement of about 180% improvement, from 5 kobo to 14 kobo. Now, the current share price is 4 naira 96 kobo, as against 37 kobo for the year 2024. So now in proper perspective, in layman's language, it's telling you that, assuming you invested 370,000 naira in this company in the year 2024, you would arrive at 4.96 million naira. Okay, that is you are approximately 400,000 here will give you last year in the year 2024, 400,000 naira here will give you about 5 million naira here. From 400,000 to 5 million naira, representing an increase of 1,241%. 1,241%. That is what this particular place is all about. All right, invest 400,000 and you will get 5 million naira, almost like times, more than times 11 or times 12, about times 12 thereabout. You increase your money, put in 1 million naira, you get about 12 million naira. That's what this particular place is all about. So now we go to the other segment of our analysis. This segment now represents the company's balance sheets and cash flow statement. A normal balance sheet is very wide. It can even consume almost the whole of this, and the typical cash flow statement can equally consume the whole of this. So for the sake of our analysis and the restriction we have on our board here, we try to present a skeletal summarized kind of bare bone version of the cash flow statements and the balance sheet. So the company has a share outstanding of 5 billion. All right, this particular figure is very important in the sense that it has a direct impact on the company's earnings per share. If you reduce this number by 50%, you are increasing the earnings by 50%. All right, and so generally, the lesser the number of shares outstanding, the better for the company, in actuality. And so the market capitalization here is 24.8 billion naira. How do you obtain this? You simply multiply the shares outstanding, which is 5 billion naira, which is 5 billion, by the share price, which is 4 naira 96 kobo. So 4 naira 96 kobo times 5 billion will give you 24.8 billion naira. All right, that's the company's market capitalization. In other words, if you have this amount of money, you could buy the whole of Tantalizer. You just bring out 25 billion naira and the whole company will be yours, if possible. All right, and so we now go to the company's equity. Equity here is something as a shareholder fund. All right, so it represents, the difference between the company's total assets and its total liabilities. By the time you subtract, the total liability of the company from its total assets, you will arrive at what is called the equity or the shareholder fund, and it's given as 4.72 billion naira. 4.72 billion naira. Now we talk about the equity per share. This particular value is the company's book value. You call it book value. Book value here on its own actually may not really say much about the company, but when you employ this particular value in line with the company's share price here. The share price here is 4 naira 96 kobo, and the book value is 94 kobo, right? So generally you subtract this from this. Okay, when you do the subtraction, the larger the answer, the result, the more expensive the company is, and the narrower, the smaller the result, the less expensive the company is. In a case where you come across a company that is selling, whose share price is below its book value, it is called net investing or net strategy. Please just go ahead and buy the company. But it's very, very difficult. It's very, very rare to come across one. But if you can come across a case where the company's current share price is less than its book value, then you go ahead and buy it. It's very rare anyway. So we now go to the company's cash position. That's the cash level. The company has a cash and cash equivalent of 192.4 million naira. 192.4 million naira is the company's cash position. So the company has a kind of robust, cash level, as we could see. on our boards here. So now move down to the most important, one of the most important parameters in analysis here, which is the company's PE ratio. The PE ratio essentially is the ratio of the price to the earnings of the company. In other words, we're dividing the company's share price, which is 4 naira 96 kobo, by the earnings, which is 14 kobo. All right, 4 naira 96 kobo divided by 14 kobo will give you the company's PE ratio, which is what? Which is 35.43. So this particular value, figure is telling us how expensive the company is, in line with other companies, in comparison with other companies in the same sector and even in the overall market. And so this company is relatively actually expensive. It is in the high double digits figure. But considering the fact that there had been improvement all through, improvement along in all these parameters, well, I could consider it an investment candidate, but not immediately. I would advise you wait a bit. If this performance continue into the next quarter, all right, then you could go ahead and buy this company. But for now, just hold on. This is the last quarter, the final kind of the fourth quarter. Then by the first quarter of the following year, the first quarter of 2026, this particular year, if the performance continues this way to improve, then you can go ahead and buy the company, but not now. That's what I will do if I'm to consider this company as a candidate in my portfolio. That's the logic I will adopt. Just wait small, and then you could go ahead and buy when things improve better than this. Please, I discovered that some people want to, generally in life, okay, if you want knowledge, you approach a teacher. If you are sick, you get a doctor. All right, and if you want to save your money, you go to the bank. Okay, you want to repair your car, you go to a mechanic. You have court case, you approach a lawyer. But unfortunately, some people want to invest, and they want to do it on them by themselves. I don't know why it is like that. When you are sick, you go to you see a doctor, your car has fault, you go to a mechanic, and when it comes to your hard-earned money, when it comes to invest, you want to do it yourself. That's why you always have problems here and there, losses here and there, or your portfolio is underutilized, under-optimized. So if you want to really have better results in your investing, please you could contact me on this number. I think I could be of assistance to you when it comes to portfolio management and to recommend what to buy, at any given point in time. So contact me, we can work together, and you could see how there will be, a drastic improvement in your returns, on investments in your portfolio. Please subscribe to this channel, like this video, and share it to members of the community. That will help us to reach out to 1 million Nigerians with this particular message about liberation from lack, from need, through investments in the Nigerian stock markets.